Thank you for joining us at XM.com for this Forex Preview video. The Fed minutes and the PCE Inflation report are out this week on Wednesday and Friday, respectively. It will be interesting to see if they allow the dollar to resume its upward trend. I'm Cristina Marujos. With me today is our lead investment analyst, Rafi Boyajian. Rafi, starting with the Fed minutes, the Fed delivered a smaller 25 basis points hike at its latest gathering, but some Fed policymakers have been rather vocal recently that bigger hikes would have been appropriate. Therefore, do you think the Fed minutes out this week will have any surprises for markets?
Well, Christina, yes, it's kind of questionable, how significant the minutes will be, because on the one hand, the last FOMC meeting was, of course, prior to that very strong jobs report, and then we had the strong ISM services PMI, and then we had the stronger than expected CPI numbers, and then since then we also had quite a number of Fed speakers expressing their latest views. But the question is that we don't know how close the decision was, because although the vote was unanimous, it's possible that some policymakers were maybe hesitant to downshift to 25 basis points. We already heard from a couple of non-voting members who aren't voting this year on the board, but they suggested that they would have supported 50 basis point rate hike at the January-February meeting. So if we hear more views potentially from the voting members, how willing would they be to accelerate the pace of rate increases, then that, of course, could potentially take markets by surprise and possibly, lift the dollar as well.
We'll look at the dollar in a little bit. Let's turn to the data for now. The CPI report last week indicated that inflation in the United States is stickier than anticipated. So what are we likely to see in the PCE report this week?
Well, there's two aspects of the PCE report. First, we've got the personal income consumption numbers. Now, we already had the retail sales data for January, and in that one, we also got a big upside surprise too. So we are expecting a substantial rebound in consumption for the month of January, partly because of the milder weather in America. But then we also have the core PCE price index, which of course we know that this is the particular measure of inflation that the Fed uses to target inflation. Now, of course, this is a lot lower than the CPI inflation. It is expected to moderate even further to 4.3% for the month of January. But, we are possibly seeing a slowdown in the rate of decline in inflation. First of all, if you have inline numbers, I don't think that's going to be particularly great news for the markets, and any upside surprises, whether in the year-on-year or in the month-on-month measures, that would also stoke some panic in the markets that the Fed would have to get even more aggressive.
And finally, Rafi, turning to the market reaction, how could the dollar perform this week?
Well, the dollar has rebounded a fair bit on the back of course, on the strong data and the hawkish talk from the Fed, but it's not really convincing. It's not a convincing rebound just yet. So we're going to have to see more substantial gains to be confident that the dollar is reversing higher and could be able to resume its longer-term uptrend anytime soon. So even if we were to get a bit of a boost from the data, from the minutes, I think traders will probably wait for the March FOMC meeting for the updated dot plot, to see where the Fed's terminal rate is going to be based on the Fed's latest projections. Until then, we might see some further consolidation or maybe some more modest gains for the greenback.
It's going to be an interesting week for dollar traders. Rafi, thanks so much. This was a Forex Preview here at XM.com.